Moving forward, the supplier, CMS Home Appliances, delivered the products to ABC Corporation and issued a purchase invoice the very next day. If we look closely, the details in the invoice perfectly match those specified in the purchase order. Now, let's proceed to enter this transaction into Xero. To record the purchase invoice, you have two options. We're using the bill option or utilizing the purchase order we previously created. If you are starting from scratch without a purchase order, the bill option is ideal. However, since we've already sent the purchase order and entered it into the software, it's more efficient to create the bill using the recorded purchase order. This approach helps maintain accuracy and save time. So let's proceed by generating the bill using that method. To convert a purchase order into a bill in Xero, start by navigating to the purchase order section. Look through the approved list to find the specific order you want to convert. Once you locate it, open the purchase order, and you will see a Mark as Billed button. Click on this button, and Xero will ask if you want to convert the purchase order into a draft bill. Make sure to check the box to confirm and click OK to finalize the process. However, this field can be quite useful. Now, you'll notice that the purchase order has been marked as billed, and all of the details from that order have been seamlessly transferred into a new purchase bill. This process ensures that no information is lost and keeps your records consistent. You have the option to review the information and edit any details if necessary to ensure accuracy. Next, let's set the date of the bill to July 5 and establish August 5 as the due date, providing us with a credit period of 1 month. In the reference field, we will enter the invoice number, which is IV0012, to keep everything traceable. Once all the details have been reviewed and confirmed, we can approve the transaction. After approval, the purchase order will be updated to show as billed. Additionally, if you go to the purchase overview area, you will find the newly created bill listed under the awaiting payment section, reflecting that the transaction has been successfully recorded and is pending payment. All right, everyone, let's see how our recent transaction impacts various financial reports. If you check the profit and loss account for this period, you won't see the purchase we just made. Why is that? It's because when we purchase inventory, it's not immediately counted as an expense on our profit and loss account. Instead, inventory is seen as an asset. In the world of accounting, the cost of inventory is only turned into an expense when we sell it. This is based on the matching accounting principle, which means we match expenses with the revenues they help generate. That's why you don't see our recent purchase in the profit and loss account. Now, let's take a closer look at the balance sheet. As you can see, the balance sheet is at the end of the last fiscal year, so we need to change the date to today. In the balance sheet, you'll see that the inventory amount under assets has gone up by $18,125. On the other hand, under liabilities, accounts payable has increased by the same amount, balancing both sides. Additionally, if we examine the inventory valuation details, you'll notice that the increase in inventory has matched up with the purchase bill we created. From this, we've learned how to make a purchase bill from a purchase order and seen how it affects different reports and financial statements. This brings us to the end of this session, where we covered how to generate purchase orders, convert them into purchase bills, and track the changes in your financial report. In our next session, we will learn how to record expense transactions. Make sure to review today's material and come prepared. We will see you in the next one.